of '94. Today we welcome Dr. Julianhosp, and he's joining us from Singapore. Thank you very much, Julian, for making this possible and spending your late evening, I think, with us. I also welcome Lisa Scherer and Marina Rosenstein from the Impraxi team. Thank you very much for making this event possible, and thanks for inviting Julian and for all the organization. So this event is labeled a fireside chat, so please light your fireplace or at least open a separate window on your computer and stream a fire pit. Make yourself comfortable, sit back and relax. I'd like to draw your attention to the fact that this event is recorded and streamed on YouTube. We hope this is okay for you. Dear Julian, as you know, the WHU is a business school, so we are fascinated by the emergence of a new asset class and its potential economic impact. However, crypto isn't being taught here yet, as far as I know. At least it wasn't for the vast majority of us gathered here on this call. So there's a wide range of prior knowledge in this group when it comes to crypto, from absolute beginners to advanced crypto pros. And we have an equally wide range of questions that Marina collected before the event. By my count, 98 questions were submitted in advance, so that's fantastic. And there's obviously a lot of interest in the topic. The problem is we only have 1 hour or 60 minutes, which is perhaps a bit at odds with 98 questions. So I'll try to cluster the questions a bit and ask at least the ones that have been asked most frequently. As a structure, I suggest that we start lightly with some questions about yourself, your colorful and dazzling background, your investment approach, and of course, your feelings about the current market turmoil. In the next block, I suggest we cover some general issues like the China ban, carbon footprint. Third block, for the crypto experts in this call, we cover some of those questions to the extent possible. And at the end, I suggest we open the discussion for individual and spontaneous questions. So if you don't mind, let's get right into it. Julian, would you please introduce yourself and say a few words about your background first? Also, one of the questions from Julian Höhler from the class of 2016 was, I quote, "You seem to be active in many fields. How do you manage your time? How do you stay calm in such turbulent times?" Julian, thanks, and it's up to you.
First of all, thanks so much for the invitation. It's such an honor, to having such a wonderful group, to have an interesting chat on quite some timely topics. I also want to add, if there are questions that are kind of tagging along to what we're discussing, just write it into the chat. And then, then I can just pick those up while we go along. I think then it's maybe getting even more efficient, and then maybe we can kind of get all the 98 questions. I doubt that we actually have 98 different questions. Most of the time, it's probably like 15 to 20 topics to discuss, and then we can be quite efficient with the time. So my background, I keep this really short because you can read this all up. I've written several books, and I think there's enough information about this public. But I'm originally from Innsbruck in Austria. I grew up there. I moved to the US for high school. And that was quite an important turning point in my life, just from getting the different picture and the vision for life. I learned how to kite surf when I was 17, and it was just the right time. It was 2003, right time, right moment. I became a professional kite surfer. It was one of the most wonderful times you can have as a teenager, and then as a 20-year-old, I was paid to travel the world. At the time, though, when I was 24 years old, I had actually seen 100 countries in my life. So it was fantastic. On my Facebook, I had this tagline, "Your dream holiday is my daily office." It was quite true. I spent so many months on the Maldives and Brazil, so it was a great time. My mom always said I need to do something real in my life. I am not going to be a professional athlete forever. And she's right. So I studied medicine, and I in Innsbruck in Austria, and I graduated in 2012. So it took a bit longer because I was still kite surfing, and so I took a year longer than the average would have been. And sorry, 2011. I graduated in 2011. I worked until 2012. I just worked for a bit over a year as a trauma surgeon. I was training to become a trauma surgeon, and I was super frustrated. I hated all the rules and not being able to experiment, which makes so much sense in medicine. But I was just missing that as a professional athlete. And so in 2012, I quit and I wanted to become a business owner. I didn't know what that meant. I wanted to start a medical startup actually, and I moved to Hong Kong. A good friend of mine was there, and he said, "Hey, with the China expansion and Asia, this could be so exciting." And for a bit over 2 years, I was trying so many various business opportunities, business ideas, especially around medicine, and none of those worked out, either because I just didn't understand how to do them. I didn't know how to execute. I was not a good enough business owner, entrepreneur. I had no business background. But in 2014, I stumbled across this new way to store data called a blockchain. And that was mind-blowing to me because it showed me that I could store patient data in a way where the patient controls the data, but he or she could transport that data to any new doctor. And to me, that was mind-blowing because the systems so far were either silos, every hospital doing their own work. And so we had patients coming in from Germany and Austria. We had patients coming in from Holland or wherever, from the US, and no one was able to bring their medical history with them. So when they came into our hospital, and we had so many skiing accidents, biking accidents, we had to do all the checks all over. So because it was all siloed. But then on the other hand, you had attempts to kind of for governments and for insurance companies to store all the data, but there were always these privacy concerns. And so to me, that was mind-blowing that a blockchain could actually completely revolutionize that because everyone could control their own data. And so I wanted to start a company around that. Again, it was, in my opinion, a fantastic idea. It was the worst time to do that. Because that topic was just not en vogue. Very contrary to today. I think if you started that today or last year, it would have been, that would have been great, fantastic timing. But the timing that was good, and timing is so essential in anything that you do, the timing that was good was that of cryptocurrency. So the financial aspect of blockchain. Again, I had no financial background, but I was an avid learner. I love learning. I'm very, very quick at learning. And I learned anything that was about cryptography. I learned about finance. I learned about the economy. I learned how money works and how all these ideas work. And in 2015, I started a company here in Singapore. Became really, really successful. We the peak probably was worth about $500 million. And I had started that with 2 other co-founders. When you think you have everything and everything is going really well, obviously egos get into the way, and startups many times kind of break apart. And so about 4 years after that, we went separate ways. And I started another company here now that's called Cake DeFi, and we're again in the crypto space. We have about 60 employees. We hold close to $1 billion in assets from our customers. We have about close to 200,000 customers all around the world. So we're B2C, and we offer our customers to deposit cryptocurrencies with us, and we provide them with cash flow from various opportunities. And it's been a crazy, fantastic ride. Cryptocurrencies and Bitcoin has made me over $100 million in investing. So it's absolutely insane. A lot of luck is involved in that, obviously. But I also think a lot of very important principles that I learned from various great other investors. Again, I think the best principles with bad luck is going to get you nowhere. I was really, really lucky, really, really fortunate. And so, that ecosystem has given me a lot. I have a super large YouTube channel, a very large community. I wrote various books on that subject. And so that's kind of how everything got started.
Okay, maybe coming back to the question, how do you manage your time? That sounds like so much. Is there any specific recipe you would like to share, or is that?
At the moment, I don't have so much. I'm quite focused. So I have obviously I have my own hobbies. I go running. I play golf. I do a lot of sports. I do those in the morning. I'm an early riser. I do those in the evening. So that's, I think, fine. I have an 8 months old son. That kid is the most unpredictable thing in my daily routine because, yeah, he wakes up when he wants to wake up and he sleeps when he wants to sleep. He's active when he wants to be active. I try to spend as much time as possible, which normally means about an hour in the morning and an hour in the afternoon during the week. And then on weekends, I really focus on him. And the rest of the time, it's just my business.
Thank you very much. Yes. So next, let's move to the more general questions as announced. I counted a total of 10 questions about regulation and government. That seems to be the most frequently asked question, mainly about the China ban, the reason and the effect that this will have on the crypto market. There were also questions about whether you think other governments will follow China and how you generally see the game between regulators and crypto players on the other hand. And finally, also in this context, how do you see the planned CBDCs or central bank digital currencies coming into play? So maybe you can take this as
Sure.
the next block.
And if there's any questions, then just post it into the chat that tag along there. I think the first thing is to get rid of that fairy tale that Bitcoin could be banned. It's impossible to ban Bitcoin itself because that just means you're banning math, you're banning numbers, you're banning cryptography. That's just not going to happen. And most countries actually understand that, and most countries know that. Also, China hasn't banned Bitcoin. What all these countries actually are doing, they are regulating and heavily regulating platforms that are centralized, like exchanges, and they are regulating those. And that's obviously very efficient. That works really well. And at the end, you're kind of not really banning Bitcoin, but you're limiting access to that ecosystem. And I think that's really, really important to understand. So you don't really have to ban Bitcoin because it's very difficult actually to do. You can either ban or block or set extra hurdles for these exchanges. And it's not only China who's doing this. The US is doing this, Germany is doing this, Singapore is doing this. For example, in the past, only exchanges, so platforms that facilitated the exchange of one asset to another, was regulated. Now they're looking into simply regulating if you're offering a service to host wallets. So simply that service could get regulated. Now that would mean that everyone has to have their own wallets, everyone has to have their own services, which obviously is doable, but it just makes it even harder for people to get access to that ecosystem. So these things are the things you can regulate. We can increase taxes. We can tax these things separately. And at the same time, right, it would actually work with being aligned with a central government-backed digital currency, a CBDC, because you're not really kind of blocking any of those. You're just saying, look, this is the regulation that you need. And pretty much all the banks that hold euros, that hold dollars, that hold Swiss francs, they have those steps already that you would need for Bitcoin. So for them, falling under this regulation would be absolutely no issue. I think we have to expect all these stricter rules. I think they are all it's gonna get stricter and stricter and stricter. We have to expect taxes, special taxations. We're gonna have to expect unrealized gains taxes on Bitcoin. I think that's gonna be the track record. Now there's a flip side to this, and I want to point this out. The flip side is, and we saw this in 2017 when China really kind of shut down any platform in China that offered cryptocurrency services. What basically happened was the following. All the talent, all the good money, all the legal use cases got driven out of the country. And actually, Singapore felt a lot of that. In 2017, we had so much inflow of Chinese money, Chinese users, Chinese engineers, Chinese business owners. But who stayed? Who stayed were those with the illegal use cases. And by law, by definition, they don't care about the law, so they're going to bypass that. And so that is always the difficult part if you have these open source technologies, if it's pure tech. If you're too strict on the regulation, you're driving out the good and you're just keeping the bad, and that's just going to make you lose. So I think regulation is not just a one-way street. Governments have to be super careful in not overdoing it, but I would be surprised if we don't see stricter and stricter and stricter regulation over the next 10 years.
Mm-hmm. Yeah, sure. Maybe also a question of self-interest of the CBDC governments, and yeah, sure. But what do you say about, is that going to harm the current China movements? I mean, it seems to harm the Bitcoin price in the short term. What about the long term?
Yeah, I mean, short-term prices on Bitcoin, just like on anything, are very emotional. So as soon as China goes out and says we're gonna restrict Bitcoin trading, or we restrict Bitcoin mining, which again is also quite questionable how you actually restrict mining, because all it is you're restricting calculating useless formulas, which doesn't make much sense to restrict that. But obviously very emotional short term. In the long term, it's been shown over and over again that it's completely irrelevant. Maybe a word on CBDCs. CBDCs are not going to bring much of an innovation to the financial system. So if the European Union or the US or China with their yuan come out and say, we're going to make the CBDC, it's no innovation to the financial system. What there is an innovation to is the tech applications, because suddenly you can run the entire system on new financial rails, meaning you have completely new access points that in the past you didn't have. So if you wanted to integrate with Visa or MasterCard or with the banking system, you need to really use super low level programming languages and super low level adapters to kind of connect into those systems. Very difficult, very inefficient, very slow. Blockchain, despite being relatively slow, can open this up extremely and allow for fintechs and blockchain companies to have completely new access points. So that is where the innovation really comes from CBDCs. CBDCs doesn't do anything to the actual financial system.
Yeah, no, I see. An interesting question I found from Marvin Jochen from the class of 2012. I quote, do you think widespread adoption of decentralized cryptocurrencies will affect the power of monetary policy tools? And if so, how? That is, of course, yeah, something that is relevant as well on a macro level.
I mean, at the end, it always comes down to what is the currency that's being accepted and what are goods priced in. For me, there's still a big stretch until things are going to get priced in Bitcoin. I'm not sure if we ever see this. I would be super surprised if we see it this decade, in the 2020s. I just don't see that. So unless things don't get priced in the local fiat currency anymore, I mean, obviously there will always be a bit pressure from anything that's decentralized and offers an escape, just like gold. But again, then my question is, how does Bitcoin pressure a fiat currency more than gold did? Yes, gold is less efficient, and gold is not spendable digitally, and gold is not as divisible, and gold is confiscatable. But at the end, governments had this pressure to escape into digital, into any kind of other form of money for the past decades. So I'm not sure if Bitcoin adds additional pressure. I think it just adds pressure, but not additional in comparison to what gold already did.
I see.
Yeah.
Okay. We have quite a few alumni in the banking sector, and so we have also quite a few who are wondering about the impact of crypto assets on commercial banks. Like, for example, a quote, how do you think adoption of decentralized cryptocurrencies will change the role of banks in society? Or a question from Lutz Lindner from the class of 96, do we need banks or other institutions to build trust and make crypto assets investable? Do we still need them?
I think what the role of banks is going to have to be is that really more of a service operator, less of a custodian, or less of a powerhouse in a sense that they own your money and you are basically hoping that they kind of release your money. And I think that's the trend that we're going to see. Without crypto, we're already seeing a trend towards digitization. We see a trend towards me not having to actually go to a physical branch, but me just opening an app, be it in Germany N26, be it Revolut in the UK, and so on and so on. We see these new banks coming up and kind of pressuring traditional banking already. The extra step that's just going to happen is that now instead of the bank controlling the money, I control my own money. But what I need is, and this will not go away, I just don't see this, and the statistics speak for themselves. I think less than 5% of the population is actually capable of taking these financial matters completely into their own hands. There's so many kind of questionnaires that kind of ask, do you want to put matters into your own hand? And there's so many people, like 60-70% who tick yes, I want to be in charge. But when it actually comes to having no customer support, actually having to deal with all this yourself, suddenly people are like, oh, no, like that's way too much for me. I need hand holding there. And that is where I see banks coming in. Banks will be less likely to be pressuring their customers simply because they have their money. And if you don't do what I say, like we just limit access to your money. And it's going to go way more the direction of, okay, it's going to be like a mutual kind of respectful eye to eye. To me, it's really like when I work with traditional banks, it's like, it's my money, but I always feel like, my goodness, if I don't behave, you just lock my account. It's such a one-sided direction. I think, yeah, and in crypto, I just don't have that. And so to me, at the end, that's what the role of a bank over the next 10 years is probably going to evolve into. And I don't know, 80% of banks are not going to do it. They're going to go extinct, and 20% are going to do it. They're going to offer great investment services. They're going to offer they're going to move way much more to a service-oriented model, and they're going to prosper and flourish.
Yeah, absolutely. And also on the other hand, as you say, it takes a deep leap of faith to really take matters in your own hands, and knowing that one wrong transaction and your funds are lost, basically.
Yeah.
So banks probably will have a role, but
you see it in the US. You see it in the US. The large banks in the US are starting to offer for their high net worth individuals all these services. You see it in Switzerland. Yeah. Bitcoin Swiss is going this route. Austria and Germany, I don't know. I just am not aware that Austria, Germany, they're offering that in these countries, right? And so it's gonna happen, and yeah, and those banks that are gonna move fast, sure. Let's see.
Yeah, thanks. So different topic. Quite a few alumni are concerned about the carbon footprint of Bitcoin. Well, open topic. Can you elaborate on that a bit, please?
The very first question is, what is the concern as a whole, right? So the carbon footprint of anything always stands in the value that this thing puts out, because we can put the carbon footprint to anything, right? We can put it to the internet, we can put it to this Zoom call, we can put it to cell phones, we can put it to social media, we can put it to your car, we can put it to airplanes, we can always put it to something. So at the end, we have to ask ourselves, is it worth it or not to have that carbon footprint? That's how it all starts. And so to me, even if the carbon footprint stayed as it is right now of Bitcoin, and again, I don't think it will, and I wouldn't want it to stay that way, but even if it were to stay as it is, I would be okay with that for the very simple reason, because money is something so fundamental, and I just want to have an option to not be dependent on governments on how I handle my wealth. I want to have an escape route, and that escape route to me is so essential. Yes, we can talk about saving the environment all day long, but if I'm a prisoner, I will have other worries other than the government, the environment, and any human being is going to be this way. And you see this in all the countries where there's economic suppression, where there's no freedom. These countries statistically do not care about the environment for the simple reason because people need to survive first. And if I'm being suppressed by the government, I'm not going to look for these other options. So if I can be free, and if the government knows that, because I can cross a border and the government cannot take anything away from me because all I have is 24 words memorized in my head, and that allows me to transport millions, dozens of millions, hundreds of millions of dollars of my wealth. Countries know that, and they are not going to be able to suppress these people the same way as they could take away gold, they could take away real estate, and so on. So to me, that's where the foundation of everything starts. And so if someone says, what about the carbon footprint? My counter question is, what like, to me, the value it puts to me is way more important than the carbon footprint. Now, that doesn't mean I would want to leave it that way. And I don't think anyone in the ecosystem would want to leave it this way. And we see this. We see trends of Bitcoin mining shifting towards renewable energies. We see Bitcoin mining shift dramatically to so-called excess energy. Especially in China, we see this, where Bitcoin miners go and they kind of negotiate with a lot of the energy providers that they can utilize this excess energy that normally somehow needs to get wasted off, and they can use this in the Bitcoin network, mine Bitcoin, generate Bitcoins with energy that normally would have just been kind of gotten out of the system without really being efficiently used, being turned into heat or something else. That's the first thing. The second thing is obviously renewables is going up and needs to keep going up. Of all of Iceland, people discuss when they talk about the energy footprint of Iceland's Bitcoin mining, that it's surpassing Iceland's other parts of energy. What they're not mentioning is that a lot of that energy is actually geothermal, is renewable. So that is super, super important. And it goes even further now. We saw Elon Musk, righteously or not, discuss the footprint of Bitcoin mining and him not wanting to accept Bitcoins on Tesla. Fair enough. He has backpedaled and said, as soon as Bitcoin's mining is going to be 50% green, I'm more open to accept it again. I see very large institutional investors going the route of saying, if I want to buy Bitcoin, I want to know if that Bitcoin is mined with green energy or not. And I want to know that. And so now firms actually start investing in mining companies that exclusively mine green Bitcoin. And to me, that's exactly the right way to go. It's unfair going to Bitcoin and saying, hey, you're not green, get out. Which is super unfair because most other industries for decades weren't green. And now they're going this route. So to me, it's exactly the same thing. Yes, it's not optimal where Bitcoin is right now. And yes, I would hope that over the next 10 years, this entire footprint is resolved or it has really gotten optimized. But that doesn't mean that just because right now it is where it is, that it doesn't have a place to exist. It's actually the exact opposite for me.
Yeah, thank you. And with a libertarian approach, you certainly have a resonance here. But maybe this is an opportunity to dive a little bit deeper into the technical details, also like proof of stake, proof of work. Is that in that context? What is your take on that?
It's a very fundamental question in any blockchain, and in any ecosystem that you have, the question always arises: who has a say, and what does this say mean? In a centralized system, by merit or by whatever system you came up, there's a party that has the say, and so it's very easy. But in a decentralized system, it gets very tricky because if you can have a say for free, the person who can just create the most fake nodes that pretty much cost nothing has the biggest say in the network, and thereby the network becomes centralized. So you wouldn't want that. So the fundamental question is, how do you get a vote? How do you have a say? And the oldest fundamental way is you make a mathematical calculation, you prove that you do the work, you prove you burn some energy. It's easy. Energy is limited. We know this, law of thermodynamics, it's not gonna fall. So it's super easy to prove that you have a say. Obviously, newer blockchains try to figure out other ways to have a say. And one of those is so-called proof of stake, where you lock up money. Ethereum, Michael, for example, sent me this private message here on Zoom asking me exactly that same question. So that's why I'm tagging it along here. Ethereum, for example, the second largest blockchain ecosystem, started with proof of work, just like Bitcoin, and is now trying to see if it can shift into a proof of stake model. No one really knows if this is going to work. For example, I'm involved in a blockchain project called DeFiChain. That project uses proof of stake, but it actually requires to piggyback on Bitcoin to use the security of Bitcoin. And the reason for that is very simple. Proof of stake, while super efficient and while super eco-friendly, we don't know what are the potential attack vectors here. And no one really knows. A lot of people have some assumptions and a lot of people take some educated guesses, but at the end, we don't know. And that will always be a risk factor. And so with Bitcoin, it's super, like, we know fundamentally from physics that it's not possible to create energy out of nothing. So fundamentally, we know that, but it's so tricky as soon as it comes to an ecosystem that talks about money and money being power and having that plutocracy that in the real world would never work, right? But for some funny reason in the blockchain ecosystem, people are totally fine with it. And again, I'm okay. I'm involved in a project that actually does that, and so far it has worked fine. But we actually need Bitcoin as a security layer, and so there's just a lot of questions in how Ethereum is going to do this. And again, Ethereum hasn't converted to Ethereum 2.0 yet. So a lot of question marks. No one knows for sure. And I mean, if I would be betting on only one thing, and that thing being the very safe one, I would have to go for the proof of work model. It's proven, it hasn't had a single fault. And again, it's difficult to make a clear answer. Sure, it would be awesome if votes could be defined by the money you have in the ecosystem, but there are a lot of questions.
In that context, how do you see, and there were also some questions about Cardano, Polkadot, Solana, they seem to manage.
I mean, the size and the stuff that's at stake, right, is incomparable to Bitcoin, right? Just because the blockchain runs doesn't mean anything, because there isn't, they're not getting attacked. The economic scale of them is incomparable to Bitcoin. I don't know what the market cap is of Cardano right now, but I would be surprised if Cardano is in a significant percentage in comparison to Bitcoin. I think it's absolutely minuscule in importance in comparison to Bitcoin. So it's just like anything. If you're the champion, you will always be attacked. You will be attacked in the press. You will be attacked by politics. You will be attacked by the lawmaker. Like, I have not heard a single politician go out and mention any other cryptocurrency other than Bitcoin, maybe Ethereum. I've not. So there's no attention on those blockchains. It doesn't mean that they are not relevant. I'm just saying they're not tested. We don't know. Bitcoin's been attacked and tested and scrutinized for over a decade now. I don't see any of those other blockchains. I've not heard the SEC or anyone discuss those coins. Sure, some investor can tell me that whatever coin is not a security, but have we seen this? The only two coins that I know for sure that the SEC has scrutinized and has confirmed it's not a security is Bitcoin and Ethereum. And so that's, to me, where there's just a lot of questions. Just because so far that nothing has happened doesn't mean that something will happen. It just means risk reward, right? And at the end, that's what it comes down to. That's also where, when I come from an investor perspective, the only one or two coins, if I would just want to close my eyes and say, sure, invest, is Bitcoin and Ethereum, for those reasons. They have been tested and challenged, and I'm not saying they're going to make the biggest returns. I'm not saying that. I'm just saying they have the lowest risk.
Yeah. Okay, so we also have a question about Bitcoin dominance as a technical term, and so your take is it will stay for quite a while, as a conclusion.
Yeah, I would not see this go away so fast.
Sure. All right. Well, then let's maybe move to the exciting topic of decentralized finance and maybe also NFTs in that context. New world, new smart contracts. Can you introduce us to the topic?
So DeFi, decentralized finance, is actually what Bitcoin kind of started. So we can define various function sets, but generally people accept that there are 6 to 7 function sets that are DeFi. And all they basically do is you look at what banks are doing, and instead of having it centralized, you do it decentralized. So the first 2 function sets that Bitcoin kind of started was that of creating value and then transferring that value. So, and that at the end is what Bitcoin's doing. It's super simple. It's a store of value and you can transfer that. Not too exciting, super basic, but it shows all the time complexity is the enemy of execution, and Bitcoin is just so simple, so straightforward, and that's what makes it work and so easy to understand. And then for a long time in the crypto ecosystem, no other function sets were added. Actually, Ethereum was the one defined in 2013, then 2014, and kind of really kickstarted in 2015, where they defined additional ideas. And the ideas was, hey, we should also be able to decentrally exchange stuff on a blockchain. Not only transfer, but exchange. And exchanging means you offer me one thing, I'll offer you the other thing, and if we both like it, we automatically exchange this. It's very different to what a bank or a centrally platform does, where you have to trust someone. Here, this happens via blockchain. So this is decentralized exchanging, and it's called a DEX. Funny speaking, DEXs didn't become really popular until last year, even though they've been around for super long. But last year, they completely ballooned because of a concept called liquidity mining, where people could provide liquidity to those decentralized exchanges, and they would get an incentive from the transaction fees, and then it entirely ballooned up. So that decentralized exchanges, then you have decentralized lending, very typical to what banks do. You borrow, you lend, you have to lock up some collateral, and so that's you have the guarantee via the blockchain. Quite straightforward. One thing that we're going to see a lot this year, in my opinion, is that of decentralized tokenization. That's actually a very futuristic topic. What this means is, instead of having a share, like an Apple share, for example, and you represent that share as a token on a blockchain, you don't have a share. You just have the promise of the blockchain that there's a ticker, a price ticker, and that ticker mirrors the price of the actual Apple share. So super futuristic, because instead of trusting that a company has the share locked up and creates a new token, and that token represents the share, and you always having the right to redeem the share, you start trusting an ecosystem that the price tracks an actual price. From a regulatory standpoint, it's completely disruptive, because suddenly there's no actual regulation, because there's no security law. Because whenever you talk to a lawyer, the lawyer is going to tell you, if you're crazy enough to invest in this thing, then like there's no legal hurdle that's keeping like that ticker from being just a ticker. It's just like Bitcoin, right? Nothing else. You're just having a virtual thing, and you trust it. That's your problem, right? That's not the bank. That's not the government. So super, super disruptive, because this means that commodities, precious metals, securities, any kind of debt, any kind of loans, they can suddenly be represented on a blockchain as a token, decentrally, without regulation. We don't really know yet what this is going to mean from an investor standpoint, but we're going to see this year. We see a lot of platforms, also my own company is working on that. So that's going to be a big, big game changer. And obviously on top of that, suddenly then you have the next form, which are these derivatives. So you have predicting value. So you have like futures, options. That's leverage on top of that. Yeah, and so that's the sixth kind of function, and the last one is that of identity. That's really futuristic. I want to skip that for now. But so these would be the 7 functions, and that's DeFi, right? So the biggest sector, if you look at all the cryptocurrencies, I would say at the moment probably 80 to 90% of all the dollars that are invested in cryptocurrencies are actually invested in DeFi. The second sector that came out is that of meme coins, actually. And that started out with Doge. It didn't really become a sector until, I would say, last year, but it started, I think, in 2013, really early. And the idea just was, let's create some coins that are actually chokes. And obviously with Wall Street bets and the GameStop kind of ecosystem, these things started to balloon. I think they're super speculative. I wouldn't say the value is 0. I think there's value in those, but I would be super, super careful putting my dollars into those coins. And then obviously you have this entire collectible idea. In the DeFi sector and also in the meme coins, any coin within the group is equal. So one Bitcoin is the same as the next Bitcoin. One ETH is the same as another ETH. We call this fungible. 1 ounce of gold is the same as another ounce of gold. In the collectible sector, if we're talking about stamps and talking about art, talking about gaming, talking about skins in games, talking about, the entire kind of card games, these things are non-fungible. Yes, there's 52 cards in a deck, but every card is different and has its unique features. the ace may be better than the king, maybe worse than the king, whatever, right? So suddenly you have these non-fungibles. And this sector started in 2017, didn't really get much traction until last year. And suddenly last year, especially with the NBA had a partnership with so-called NBA Top Shots, and they made a lot of collectibles about highlight films from NBA players. And that just completely took off. And we've seen almost a collapse of the NFT market over the last 2 months. But I think long-term, that's really, really exciting. And so if you look at the entire crypto ecosystem that people invest in, we still have a couple of other ideas, but the main ideas actually are, 4 ideas at the moment that people invest in. They invest in DeFi, Bitcoin, Ethereum, and so on. They invest in meme coins, they invest in NFT, and they invest in company coins that, like Binance, for example, has that, where the coin is directly related. It's almost like a share, even though without being a share, directly related to the success of a company. And that's kind of the entire ecosystem as an overview.
Sure. Thank you for the overview. That was perfect, and I think helped a lot. Clearly, the most interesting from the perspective of a business school is probably this decentralized finance, and
for sure.
This really blew my mind as well to see that. I mean, we all learned this order book, supply curve, demand curve, and you build a price. And you can do that different by liquidity mining. This is really, that's blew my mind away as well. And so really encourage everyone to have a look at that.
And this can go further. I mean, maybe and I know this may be completely busting some people's brains now because it's already too deep. But like for those that really understand that, imagine, I mean, the entire liquidity mining concept can move actually even further down the rabbit hole. Like you can do the same thing with options. So option pricing, for example, doesn't only have to come from an actual options order book, but it can come purely from liquidity, supply and demand. And that's absolutely mind-blowing, because then suddenly options would be completely decentralized, where a lot of these platforms actually have this counterparty risk. And so now suddenly you can actually completely exclude this counterparty risk. And yeah, that's just totally crazy to me. I think we're going to see a lot of that this year. These derivatives built on top of other concepts, exactly based on these decentralized ideas. It's absolutely insane. And then some people might ask, so what's the entire point of this? I mean, why have this if I trust my broker, right? I mean, most of these brokers are super trustworthy. I don't want to actually criticize that. But the real incentive is that of interoperability. Suddenly you can invest in an Apple share, you can switch right over to gold, and you have pretty much no transaction fee. The transaction fee are cents, no matter how much you're moving. And it happens let's say within seconds, or like super quick. And so suddenly your entire portfolio strategy, your entire cost, your entire accessibility, that's just bonkers. And I think that's where the real value of this ecosystem lies. It's the same as the internet, right? Yes, I could pick up the phone and I could be on the phone, and that's one line. At the same time, I could just send emails. And at the same time, I could be on a video chat with you on a different system. But on the internet, suddenly everything is interoperable, and that changed the game. And I see the entire DeFi sector as a whole very, very similar there.
Yeah, it's extremely fascinating, absolutely. But now, coming to the last quarter of an hour, I would like to open the discussion for everyone and encourage you to maybe ask directly your question yourself in the chat to Julian, or
I mean, everyone is sending me messages privately. You could just send them publicly as well.
Yeah, as you like. So just...
Or you can also, if you want, you can unmute yourself, switch on the camera. You can ask your question that way as well. I'm okay with that too. Whatever you want.
We covered almost everything a little bit, but now it's up to you to go deeper. Unless I would continue.
I'll answer a question here that I got. What's your view on the recently growing allegations against Binance and Tether, considering they're the largest exchange and Tether is the largest stablecoins? Could these pose any kind of threats to the entire market? I'm not familiar with the Binance allegations or the Binance threat. I think any large exchange, be it Binance or Coinbase or something, obviously always has a bit of a black swan potential. So something that's very difficult to calculate and is actual risk. Keep in mind, actual risk are things that are difficult to calculate. Anything else is calculatable volatility, but these things are tricky to calculate from an investor standpoint. So I'm not 100% familiar with the risk of Binance or what's kind of the idea here. Tether, on the other hand, it's the stable coin. I think it has like $35 billion of, or even more in outstanding tokens, and these things should actually be hopefully covered. That's obviously a key point. There's a lot of questions there. One question is, a lot of the dollars that Tether has are actually in debt securities, kind of like credited by the US government. And there's a lot of questions on what if these things default. I think it's a very low probability of that happening, but there's a lot of risk. And then suddenly the Tether all become worthless. That would be like a vacuum cleaner and completely sucking up pretty much all the liquidity there's in the market. So I had the CNBC write up, I think 3 years ago, 2018, where I said Tether is the single biggest risk that is very tricky to calculate and no one really knows. And it's actually not that unlikely. I want to highlight that. There's a lot of questions. So that together, and there's a second risk that I think is very difficult to calculate and still probable, is that of Satoshi actually having access to the keys and being able to move over 1 million, maybe close to 2 million Bitcoins. Both of those scenarios are definitely not, they're definitely non-zero probability events. I would even say they are possible, not even like I mean, of course, they're unlikely, but they're possible. Difficult to calculate, and I would keep them at the back of my mind as an investor if I would overexpose myself to a crypto position.
Yeah. What's next?
There's another question here. What do you consider as the biggest events for a price increase of DeFiChain? So DeFiChain, just to kind of explain that, is a project that's built on top of Bitcoin. I think a key thing here is really this concept of decentralized tokenization. I think that's really, really key to the entire concept. And I think that could be a powerful tool, especially also for Bitcoin. Why is my own company working with Tether and not with DAI? It's very simple. Tether is so big that using another stable coin is just not attractive. The market dominance of Tether is so large, it's unbelievable. There would be an alternative called USDC, but that thing is quite regulated in Singapore, because Singapore sees this as actually backed. And so they see this as e-money here. And so it's a bit tricky to integrate that. Where Tether, even the Singapore regulator says, yeah, we don't really know. If you trust this thing, your opinion, like, not our problem. So that's the main reason, actually.
Interesting.
How fast do you think the short-term influence of Elon Musk and his tweets on cryptocurrencies will wear off? I mean, at the moment, we see the exact opposite. People always, in general, people tend to be haters, and they tend to be cynics, and they tend to be critics. But at the end, they are, because they admire the people that they hate or that they're cynical of. And you see this with Elon Musk. So many people said, oh yeah, he's investing in Bitcoin in February, fantastic. Then they became all cynics and critics and haters because he has been negative towards Bitcoin. But guess what? Yesterday he posted, and if you're wondering why did Bitcoin pump by 26 or 27%, and you can trace it down to the second. I mean, people do this all the time. And it was because Elon confirmed that he hadn't sold any other Bitcoins other than the 10% he had publicly disclosed, I think 2 months ago already, and that he would pick up accepting Bitcoin again at Tesla if the mining would be 50% from renewables. And what happened, the person that the entire crypto ecosystem said we're not listening to anymore pumped the market by 25%. So at the end, never forget that. The reason why people hate on other people most of the times actually because they admire them, and in that case it was so hilarious actually to see the crypto ecosystem be so critical, but then completely having this 25% relief rally just because this one guy said, yay, we may pick up Bitcoin again in the future. Always nice to see. Do you think there's a chance for a decentralized cryptocurrency to eventually become globally accepted legal tender? No, this is the short answer. And the long answer to that is that having fiat currencies is actually not all too bad, especially in its early stages. For the simple reason, because you have this centralized, and the reason for that is decentralized, anything that's decentralized is immobile. It's very difficult to move. Just to give you an example. For Bitcoin to have its latest technical update, it took 4 years, and that's Taproot. And to be honest, I still don't understand why anyone would not upgrade to this latest technological upgrade that Bitcoin just signaled yes for, and that's going to go into effect in November. It made zero sense that it took even 4 years, but that's because it's decentralized, and anything that doesn't have leadership, anything that doesn't have anyone that people can follow, that dictates a direction, it's very difficult to move. And I'm telling you, a financial ecosystem needs to adapt to any kind of circumstances. And the only thing that will never change is change itself. We know that. We can discuss it back and forth if all the money printing that happened last year with COVID and so on was good or bad. We can discuss it, but there will always be enough reasons why the money printing was okay, the same as there's enough reasons for the money printing not having been okay. I'm not sure if a pure Bitcoin-based system would have not completely put the world into almost a world war last year, because so many people would have totally lost everything. I have a lot of good friends in the US. I have a lot of good friends in Europe, there in the restaurant industries. I mean, they're all telling me, they're like, look, like, it's not my fault. Like, yes, we can discuss if the COVID regulations were appropriate, but that is a totally different discussion now. With all the situation, if I wouldn't have gotten all the money support, I would be bankrupt. And that's my family. And I don't know what I would have done. And I get it. And so Bitcoin would have not solved that. Bitcoin would have not helped there, right? So, and that's just what I see as a very difficult step in the first place. And the second thing, I still struggle to understand how anything that's appreciating in price and probably appreciating in value over time as well can actually be seen as a currency. I just struggle with that concept, because why would someone give something away that is deflationary, that could appreciate in price tomorrow? And you actually want to have a currency that's depreciating because it actually speeds it up. So to me, I think I always think of Bitcoin and anything that's actually decentralized and would be a crypto asset. I see it more as an asset rather than a currency. I get it. Of all the Bitcoin like fans, I'm the total exception there. Most people always say that I just am not a big of a enough believer. Maybe, fair enough. I don't know. Maybe I rather think a bit more pessimistic and look forward to being surprised to the positive. I just don't see the euro or the dollar going away that fast. And if it goes away, it's gonna get replaced not by Bitcoin, but by another fiat currency.
Any more questions? Or in the meantime, maybe one announcement. We've seen that there's really a lot of interest and competence in this group also. And I was thinking maybe perhaps we could channel this in some sort of self-organized way. So help each other or divide certain research tasks or something like that. So the alumni, if you like, send me a message afterwards if you're interested. But anyway, any more questions from your side? Otherwise, I have really a backlog of many questions here on my list. For example, if there's no one else, what factors do you consider before investing? Just practical advice, maybe, even though I don't know if you're in this business, but what do you do?
Okay, let's look at there's some really good research done on successful investors. And at the end, you will figure out that there's it's very difficult to find this one single strategy on how they made money. But what you actually figure out is there's very clear commonalities on how they not lost money. And that is always the key thing in actually in all those cases. If you actually look at life itself, right, you survive not by being the best, but you survive by not dying. And it's the same thing in investing, right? If you ever get to zero, that's it. Like, you're, as a pure investing from zero, there's no way back. So first rule number one, and I mean, I'm giving you all the rules that like Warren Buffett's been teaching for what, 70 years. Rule number one, don't lose money. And so, especially in crypto, it's such a no-brainer, but people don't follow it. People look for the highest return. You don't have to do that. Bitcoin is already having such high returns. So look for the currencies with the lowest risk. That's where you need to get started. It's so counterintuitive because people never go for that. People always want to look, people always ask, which coin has the biggest potential? Yeah, go and buy a lottery ticket. $1 can return $1 million. Man, that's 1 to 1 million. It's the highest possibility, but it's not about the possibilities, it's about the probabilities. And so at the end, you want to look at where you're not losing money. That's where I start. The second thing, if you try to maximize, you will always lose. You shouldn't be trying to buy the bottom. You shouldn't be trying to sell the top. What you should be trying to do is buying cheaper than you're selling. Trust me, it's such a simple concept of successful investors. The average retail investor just doesn't do it because they wanna, the questions I get on YouTube all day long. I have 200,000 followers on YouTube. I make a video. You know what's all the questions? Do you think that's the bottom? Do you think that's the bottom? Do you think that's the bottom? It's totally irrelevant if it's the bottom or not. What's relevant is how confident are you that over the time frame that you set, you can get a return in comparison to a competing investment. It's so difficult for people to understand that. It's not about buying the bottom and selling the top. It's about comparing your investment to a competing investment that is the alternative. And what's your alternative? If your alternative is the S&P 500, then you're trying to compete with a 7 to 8% per year hurdle rate. That's kind of what you're trying to compete with. So are you confident, or how confident are you that over the next 4 years, 5 years, 10 years, $1,000, $10,000, $100,000, $1 million invested in Bitcoin is going to generate at least more than 8% per year, annualized? If you're relatively confident, why do you try to pick the bottom and why do you try to pick the top? I don't know. I see so many people lose by trying to market time, and I see so few people that are actually super successful. I made an entire video. It's 2.5 hours. It's German, where I share how I made $100 million investing in crypto. I'm not kidding. Anyone could have done that. It was just pure luck in staying in the market. It has nothing to do with picking the bottom, picking the top. It's just that I didn't listen when people said I should be selling, or this is the top, now everything is panicking. I don't know. I think over the next 10 years, Bitcoin is going to do super well. And now comes the third thing. If all you invest in is Bitcoin, I'm sure you're going to do super well. As soon as you invest into anything else other than Bitcoin, you should really reflect if you want to pick up that additional risk and if you're relatively sure that that additional risk is going to produce additional returns. You just have to be super sure, because Bitcoin is going to do super well over the next 10 years. So are you sure that whatever additional risk you're taking, is that worth the additional return? I don't know. And you need to do your own due diligence. And that is where I'm coming from, where I'm like, Bitcoin to me is the must in everyone's portfolio. We can discuss about the percentage. Depends a lot on the volatility tolerance you have. Bitcoin is super volatile, which makes it such a great investment. Like, volatility is the friend of every good investor. So it's fantastic, but man, it can be super heartbreaking on the way down. So yeah, and as soon as you go into altcoins, be super sure what you're doing. None of these things are surprising. None of the newspapers love to write about this stuff because it's boring. But at the end, yeah, you can, I don't know, look at any of the super successful Bitcoin investors. They're going to tell you the same thing.
Thank you very much. Yeah, that was helpful, I think, for everyone. And So if there's anything else you would like to share with us, I mean, that was wisdom and advice, but maybe there's something more. Otherwise, there's one small request I see in the chat, the link to this video, probably via your YouTube channel. And
just search for, Julianhosp 100 million.
Julianhosp, you'll probably find it at some point.
Yeah, here. It's German though.
Okay. So yeah, if there's anything else you would like to share, Julian, you're more than welcome.
The last thing I want to share is I think some of the most successful crypto investors try to kick out their emotions. I think good investors manage their emotions really well. So try to kick out your emotions. The easiest way to do it is if you automate a lot of things. Use platforms that automate a lot of stuff. It's just in anything, typical dollar cost averaging. It's nothing new. All the successful shareholder investors, ETF investors are going to tell you the same. And the other thing on Bitcoin, the time horizon you need to have is at least 4 years. Anything under 4 years, you are gambling on the market cycle that we're in. And if you're wondering right now, Bitcoin dropped from 65 to 32, so minus 50%. Now we're like dancing around 40,000. If you're asking yourself, if we're in a bull market, bear market, what's going to happen? It just shows that your time horizon is too short. And that's going to screw with your emotions. That's going to make you make bad decisions. As soon as you think about 4 years, it's not about where Bitcoin is going to be this year or next year. It's about where's Bitcoin 2025. That's what you wonder. And you ask yourself, am I going to beat a competing investment over those 4 years? And I'm telling you, there's not a single 4-year time frame in Bitcoin, not a single, over its history. And the history is not long, fair enough. It's 12 years, but there's not a single 4-year time span in Bitcoin where 4 years didn't completely outperform stocks, whatever you want to pick, gold, any kind of competing investment. So 4 years, that's the minimum. And I think just so many people struggle with their investment because they don't have the 4-year approach. They try to outsmart the market. And I would just encourage you, for those of you that already have crypto, move your time horizon to at least 4 years. For those of you that don't have crypto, buy some Bitcoin. Buy it now. If you want to know if it's a good time right now, it's a perfect time. How do I know? Well, you pick whatever amount you want to invest, split it into 3 parts, put the first third in today, and then wait. And I don't know, if the market goes down, fantastic. You have another 2/3 that you can reinvest. If the market goes up, fantastic. You are in the market already. Don't try to maximize. You're going to make emotional decisions. I hope that helps. At the end, I know a lot of these things that I say sound arrogant. Facts don't care about feelings. Never forget that. These are facts.
Thank you very much, Julian, for those very interesting remarks and insights, and for taking your time. And it'll be already late in the evening in Singapore, I guess.
It's 10, that's fine. Thanks so much. I appreciate it. Yeah, I hope it was helpful, and all the best.
Absolutely.
Great.
So good luck.
Thank you, everyone.
And thanks again to Lisa and Marina for organizing this. And thank you to everyone else for listening and joining us and for your questions. So thanks and goodbye.
Thank you. Bye-bye.